Hello,
So,
everybody. This is sort of a slightly tongue-in-cheek presentation, I guess, but it's drawing on my experience over the last 30 years or so, some of the frustrations and some of the learnings I've had writing about the sector. I've got 28 slides in 20 minutes, so I'm going to crack on at quite a pace. We're going to be looking at economic structures, going to be talking about artificial intelligence, the experience economy, the big political challenge I think we have ahead, and why hospitality is the solution to that challenge. So let's talk about the structure of the economy. And this is principally about employment structure. And when economists talk about that, they typically divide it into three sectors: primary, secondary, and tertiary. Primary being agriculture and extractive industries like mining, and oil and gas. Secondary, principally manufacturing, and tertiary, the big beast, which is services. This is how the Office for National Statistics looks at where people work. It's kind of it's interesting, not particularly useful in terms of analysis, I'd suggest. A couple of things to note here is what's happened over the last 100 years is that decline in the primary sectors, the dot at the bottom of each of those two sets of dots, going from almost 13% down to just over 1%. That's the decline in agriculture and employment. And similarly, a big decline in manufacturing from over a quarter of the workforce to less than 10%. The growth in services is sort of captured in those top two dots in both of those. I talked about services being the big beast, and indeed here is the evidence for that. 81% of total UK economic output, 83% of employment. I think we need a better way of thinking about economic structure in relation to our sector. And this is an analysis by Paul Slattery. Many of you will know him. He's an investment banker, was involved in the sell-off of the Forte assets following the acquisition by Granada. Paul suggests really what we need to do is break up that giant services sector into three subsectors: public sector, business services, and experience businesses. This is a slide from Paul's forthcoming book. It may or may not be in his book, so I got hold of a very early draft, and it may or may not be called what I've listed it as there below. But nonetheless, the point of the graph is still applies. And what we're looking at here is the decline of those primary sectors, the secondary sectors, and the growth in services, the public sector and the service business sector, the yellow and grey lines there as you go towards 2030. But in particular, note the growth of the dark blue line, the experience business sector, which is set to overtake manufacturing. So we understand, of course, from that data that agriculture is employing fewer and fewer. Here's my favorite picture of a rural idyll. I'm an East Anglian, so of course, Constable's painting here, which was made on the Essex and Suffolk borders. But the key point, I think, to understand about the agricultural employment decline does not mean that agricultural output is going down. On the contrary, we're growing more food in the country than we ever have done. It's just that we are employing far fewer people. We are doing more with less, and this is the critical point to register with this. We've got a very similar story in terms of manufacturing. I would argue manufacturing employment is now an irreversible decline. We saw on that graph from Paul's book about the inflection point was in the 1960s. It's where it went from its peak of 25% of employment and heading towards the 10% piece. But again, the point remains, there's all this talk of post industrialization, deindustrialization. We are still making a lot of stuff. We are the 9th biggest manufacturing country globally. According to Make UK, it's 183 billion pounds worth of stuff we are making in the country. We do have a challenge with some of our policymakers, however, in that there is a bit of a fetishization of manufacturing. Somehow manufacturing is seen as real, and what's going on in the services space is not real. It's not seen as proper work for some reason. This is an example here. Robert Lighthizer, he was an advisor in the previous Trump administration, and he talks about taking jobs, manufacturing jobs out of China and bringing them back home to the US. Now, it may or may not be a good thing to take the manufacturing out of China. That's a geopolitical issue, which I'm not addressing here. But it's bonkers to think that we're actually going to be seeing more jobs in America as a result of this. The reality is that where manufacturing is brought back to the US is going to be done by robots, and where it still needs fingers and eyes, the jobs are going to be go to places like Mexico, friendshoring in the argument. So let's start looking at the services sector, that big beast, and the first of our three subsectors here, which is public sector. Now, public sector has a problem, and this is, as we all know, the tax burden is at an all-time high, and it's very difficult to see the public sector being a big growth area for employment, given the current level of taxation we have. Very difficult to see how much higher this can go. Certainly, we see it pushing up very strongly in the EU, but I'm not sure politically it's going to be acceptable here in the UK, and certainly not in countries like the US. If we start thinking about the second of those subsectors, business services, I think there's even more of a problematic scenario with regard to future employment growth. This is a BBC report on a Goldman Sachs paper that suggested 300 million jobs, and of course that's globally, it's not just the UK. 300 million jobs are going to disappear as a result of artificial intelligence, the adoption of artificial intelligence in the business world. And what Goldman Sachs are saying is that the most impacted jobs are office jobs, they're legal jobs, and they're jobs in things like architecture and engineering. This is what the IMF had to say on the matter at the beginning of this year. And I just want to read one sentence from the executive summary. And it says, in advanced economies, about 60% of jobs are exposed to AI due to prevalence of cognitive task-oriented jobs. And it's that cognitive bit, it's that brain work piece that I want you to register. This is the World Economic Forum, what they're talking about in terms of where the jobs are going to go, where they're most impacted, and where actually we're going to see more jobs coming. So there's a lot of talk, the advent of AI. Oh, we're going to have, I don't know, robots who are going to start caring for people. We're going to see self-driving cars. It turns out that is actually pretty tricky. And in fact, what the WEF is saying, we're going to see more driving jobs in the next few years rather than less. So Elon Musk's dreams, I think, are going to be confounded for the time being, at least. And the jobs that are going to go are actually in the professional services sector. Now, I just want to bring this home a little bit in terms of some, this very ivory tower at the moment, bring home some real world examples. This is Tim. I play tennis with Tim down here or up here, depending where you're sitting. I live in Cambridge. Tim is CEO of a business called Thought River. Tim's a lawyer by training, and he's a tech entrepreneur by trade. And for the last decade or so, Tim has been feeding into his machine learning bots legal contracts. What he's now able to offer is, if you've got a contract, you can shove it into one of his bots and it'll put out a report. If it's a straightforward contract, his bot will say, well, look, there's nothing too alarming here, just sign on the dotted line, it's all good. Or it might pick up that somebody's snuck in a clause here or there that needs to be reviewed by a human lawyer. And indeed, if it's a much more complex situation when there's lots of docs to be fed into Tim's machines, what he will do, what the machines do, is produce a report which can then be analysed by the lawyers on either side. Say it's a takeover situation, you've got a big data room stuffed full of documents. The bots can go in there and do the work of the junior lawyers, which often takes weeks normally in terms of work by the junior lawyers. Tim's machines can get in there and do that much quicker. And of course, those junior lawyer jobs are now in question. Here's Nico Sumilo, another pal of mine. Nico is Associate Professor of University College London. He's speaking at our Operational Real Estate Festival this June the 27th in London. He's speaking about AI, and his focus is very much on the real estate side of things, and he's showing just how effective AI is at asset management, and indeed it does a better job at that junior level of asset management than humans. Again, it puts a question mark against those jobs within asset management. Now, we can overdo the gloom. When we mentioned the World Economic Forum, they talk about AI being the fourth industrial revolution. The first industrial revolution, the steam one we saw, obviously we started that off in the UK. The second industrial revolution at the turn of the 19th and 20th century, the technology revolution, the advent of the telegraph moving information around and trains moving people around. This is just before the third industrial, this picture is taken just before the third industrial revolution, which is the digital revolution, the revolution of silicon chips and personal computers. Essentially, within a decade of this photo, all these jobs went, they disappeared, and they were replaced essentially by an Excel spreadsheet. The good news from this is that we're about to get richer. As any economist will tell you, it's productivity that counts. It's what increases our net wealth. Now, this is that Goldman Sachs report that was on that BBC report I showed you a few slides ago. Goldman Sachs reckon that there's going to be a 7% boost to global GDP as a result of AI. That's something like $7 trillion we're going to create through those productivity increases. Capital Economics, the consultancy set up by Roger Bootle, their estimate is that over the coming decade, we're going to see 1.5 percentage point increase in productivity every year over that decade. That's an incredible boost to wealth. And the important point is where that wealth is going to be spent. And it's not going to be spent on things. I had James Woolman speak at the first iteration of our Operational Real Estate Festival back in June 2020. Obviously, as you can tell from the date, that was not face-to-face. It was like kind of this environment, a virtual environment. And James made the point very well that people have had enough of stuff and they want experiences. They're in that peachy colored bit of the Abraham Maslow's hierarchy of needs, that self-actualization piece, the bit where we in hospitality sit. We're not about that blue bit anymore, about buying a flashy new car or a fancy new sofa. It's self-actualization. And how people self-actualize, it's the experience economy. This is the definitive book on that, Joe Pine, Jim Gilmore. If you haven't got time to read the book, do seek out the Harvard Business Review article it's based on, published in 98. You can see what we're talking about with the experience economy here, and you can look in terms of the analysis I showed earlier, the commodities bit being the primary sector, the goods bit being the the goods bit being the secondary sector, and services there is a combination of public sector and business services. And here we have the experience economy piece. And this is the political challenge we have ahead of us, which I think needs solving. And this is about what's happening to the share of the economic pie. And what we can see here is the decline in share of labor, and that share is going over to capital. Capital is taking a bigger bit of the pie, and it's a pretty significant decrease. So it's sort of 15 percentage points from 55% down to below 40% today. And actually it gets worse because that already declining slice of pie is being shared unequally, even more unequally than it historically has been. And what we're seeing, that blue line at the bottom there is the bottom 50% of income. Those people broadly, you could define them, say, the working class. What we're seeing there is their income stagnating and declining slightly, whereas the top 10%, that red line, that's growing markedly. So we've got this inequality, we've got inequality within countries. We've got actually, this is a result of globalization. You can see the date there, 1980, Ronald Reagan, Margaret Thatcher. Internationally, good things came out of that. We saw the rise of China, over 1 billion people taken out of grinding poverty. But within countries, we've seen this growing inequality. And this has led to the rise of populism. Working class people, understandably, are a bit fed up with what's been going on, and they are kicking back against the political leaders we have, and their political representatives. So in theory, it should have been the left, the Labour Party in the UK's case, that were representing them. But if we look there at Boris Johnson, I wouldn't describe him as a populist leader, but he certainly tapped into a vein of populist resentment in the 2019 election. And the Conservatives in that 2019 election gained 50% more working class votes than the Labour Party. A quite incredible turnabout. You know, the party that's been set up to represent working people now gets most of its support from the graduate class. Now, I think we're about to see that reverse in the forthcoming election. I think Keir Starmer's going to romp it home, but that doesn't shoot the populist fox. And I mean, I think we can see there Viktor Orban at Hungary, Giorgia Meloni in Italy, Geert Wilders, who won the biggest share of votes in the last set of elections in the Netherlands, the growing share of vote being taken by Alternative for Deutschland, and of course something we've all got to look forward to later on this year, the return of the big orange man, potentially. What does this mean in terms of hospitality? Well, I think what that data I've put forward shows is we've been over-indexing on cognitive skills. We've been paying people, that 10% red line that shot off. They've been frankly overpaid relative to people who are doing skilled work with their hands and people are doing empathy work with their hearts. Now, David Goodhart here uses the example of construction workers. Well, I don't think we're going to have more construction jobs going forward. And he also uses the example of health workers, where we're certainly not really going to have much opportunity, given the tax situation, to increase the numbers in terms of at least public sector health workers. So I think for what the offer here we have within hospitality is, look, the chefs are there with the skills, the craft skills, the front of house staff are there with their empathy skills. That's where they're going to be able to come in and make a difference. Too far. So just in conclusion here, what I'm talking about is the experience economy is the only sector which is capable of generating jobs of the future. And hospitality is the bedrock for the experience economy. It's what enables the experience economy to exist, the out-of-home experience. And crucially, and this is the question mark we have ahead of us as a society, it's whether governments are going to stop fetishizing this whole manufacturing thing and understand the importance of the service sector, and in particular the experience economy, and have policies which enable the growth of the experience economy. And it's this that is going to prevent the political unrest, and it's through this that hospitality will then save the world. Thank you very much.
Andrew, thank you very much indeed. Absolutely fascinating analysis of the sort of macro picture, which leaves lots of questions hanging in the air. And if anybody on the call has got any questions, please drop them in the chat room or stick a hand up or whatever. I know Andrew will be more than happy to take any questions. Just where you ended there, Andrew, I think you put it that the government's got to stop fetishizing the manufacturing sector and understand that the experience sector and hospitality are the way ahead and are the sort of the saviors of the situation potentially. I mean, in your experience, your view, does government get it yet? I mean, is there an understanding in government that that is the case?
No, it doesn't get it. And candidly, I think we need to start learning how to talk to government a bit better. We obsess about, I would say, the small things. We try to sweat the small things. I mean, you've had Kate Nichols on this podcast what you describe at this meeting a few times, and Kate's great performer. I think she's a great representative of our sector. Unfortunately, we're giving her a mission, which is mission impossible. We keep saying to her, look, go and plead for VAT cuts. And it's just a sign of a small-minded industry when you're asking for VAT cuts. We're a luxury goods industry. We shouldn't be. It's immoral to be asking, frankly, for VAT cuts. We should be proud of what we can deliver. What we should be asking for is, look, get the things like visas sorted out, get infrastructure sorted out, which will enable our industry to grow. That's where we should be focusing our attention. And I think, we need to grow up a little bit as an industry and recognize our power, our size, our strength, and our importance. And we're not doing that. And we need to stop being small-minded about how we go to government and how we talk to government.
So in your view, what are the sort of 3 or 4 key points or key things we should be asking government for?
Well, build a runway. I mean, for goodness sake, at Heathrow. I mean, it's pathetic. Why do we want people to go? India is the big outbound market, the big growth outbound market. Yet the British government has got 4 places where Indians can go and get biometric data to get a visa for the UK. It's madness. We need to have a bit more sensible approach in terms of how we're selling our country. We're competing against other countries in terms of big export market. We've got a big deficit actually in tourism in the UK, and we can alleviate some of that deficit by making the UK inbound more of a success, and we can do that by pitching it in the right way to these bigger markets and getting government to assist in that process. And actually, it's not a big cost here. Have the arrival process a bit better. Do something about that infrastructure piece. Recognize the damage that is being done through, the kind of things going on with our railway strikes at the moment. I mean, I have to say, actually, we're better off than many countries in Europe. I mean, I travelled in Germany over the summer, and it's a disaster system. Their railway, they are totally ashamed of it. So we can often talk ourselves down, but I do think these are areas where we can do something to do that. And I think what's going to happen in our industry and what is happening at the moment is we're consolidating, and it's a tough process in which smaller businesses are going out of business and bigger businesses are swallowing. But we do actually need larger scale players which are going to be representatives for our industry.
Oh, Roddy, you're on silent.
Apologies, I'm trying to keep background airport noise out of the dialogue. At sort of grassroots level, at a practical level, what are some of the implications, Andrew, for hoteliers, hotel owners, restaurateurs, caterers?
Yeah, well, I think a couple of things what we can recognize is that we are going to see a sea change in terms of how this sector is going to be seen. If we're the jobs of the future, and in particular, if some of those middle class kids who historically have gone into those professional services jobs aren't going to be able to get professional services jobs, they're going to bring their sharp elbows to bear in our sector. And they're going to demand proper careers and they're going to demand proper pay. And we need to start registering. Actually, we're going to have to start doing that, paying more and offering better career structures, which we have singularly failed to do. Some of that can come through productivity improvements. Some of that's going to have to come through putting prices up in the sector. And as we sort of showed, I think, in the presentation, there's lots of cash which is going to be created, and we can grab the lion's share of that cash with the right offers, and we need to be prepared to do that and price accordingly. One of the things we don't do as a sector, I think, is have enough differential between the very top end and the bottom end. In a previous presentation I've given on this to this group, I talked about compared socks with what was going on in pub meals, and I said the differential between the top pub meal and the bottom pub meal was not as big as the differential between the cheapest pair of socks and the most expensive pair of socks. And this is a problem, I think. We need to have a better offer at that very top end, and we've got plenty of very rich people who will pay the money if the offer's there and it's an appropriate offer. And we're not there yet in terms of that differential. And a classic problem is that we sell hotels and things like star ratings. What other service is commoditized in that way? What we should be selling is on the quality of the experience. It's nothing to do with a star rating.
And at a practical level, clearly most businesses in the sector at the moment are experiencing significant pressure on profit margins. I mean, some cost lines, yes, are leveling off and coming down a little bit, and people have been able to put prices up to an extent to hedge against the increases in costs of whether it's energy or insurance or labor or anything else. But have you got any practical advice for people in the short term as to how they can potentially address those pressures?
Well, it's in terms of what you're packaging and what you're selling. You're not selling a good night's sleep. You're selling a special night's sleep. And I think you need to think about that in particular, what it is that you have that makes that night's sleep special, and focus on marketing that and being able to put the price up of that experience. And I think that is what needs to be addressed, rather than this. They don't think of it as a service provision, it's an experience provision. That's the critical thing.
Andrew, thank you very much. If anybody's got any questions for Andrew, please just drop them into the chat box. But bye now.